Good morning and welcome to the Killik and Co market update. Markets have continued their positive performance for this year so far, and the S&P 500 index finished yesterday up 5.8% for this year so far. This week we came across some analysis that gave us reason to be optimistic. Clearly, last year was a very negative year for the S&P 500, but the index gained 1.4% in the first 5 trading sessions of this year so far. If we go back and look at every year since 1950, there are 7 other years in which the S&P 500 had a negative year the previous year and gained at least 1.4% in the first 5 trading days. Here's the data. We've got 1958, 63, 67, 75, 2003, 2012 and 2019. In all of these years, the S&P 500 made a positive return in the full year, with the lowest return being 13% and the largest being 38%. Even that lowest number of 13% sounds pretty appealing right now, so let's hope this positive performance continues. The latest productivity data for the UK came out this week, and it showed that productivity in the third quarter of 2022 was barely higher than productivity in 2019. If living standards in the UK are to go up, then productivity needs to go up first. However, productivity in the UK has really stagnated since the financial crisis. Here's a chart showing UK output per hour worked going back to 1971. You can see there was a consistent rise until 2008, and after then the line gets a lot flatter. The reason for this is a bit of a puzzle, but one argument is that because interest rates have been so low since the financial crisis, it's been much easier for companies to borrow money and to keep themselves in business, and sadly that includes companies that are not very efficient or productive. Here we've got a chart showing household disposable income going back to the 70s, and this is adjusted for inflation. As with the productivity, there was a consistent rise up to the financial crisis, but there's been little improvement since then. One way to improve productivity and therefore living standards would be to increase levels of automation, and that would enable companies and individuals to produce more per hour worked. So please do give us a call if you'd like to hear more about our thoughts on the automation sector. This week we had results from LVMH, which is the largest luxury goods company in the world, and 2022 was the company's best year yet, which is quite incredible given the cost of living crisis. Clearly the wealthy have lots of disposable income, but there's also evidence to suggest that millennials and Generation Z are starting to buy designer products earlier, so that might be evidence to suggest that because buying a house seems so unachievable for some of these generations, it's not even worth trying for, and therefore they feel as though they have a higher level of disposable income. LVMH is a very diverse business with interests in fashion, leather goods, wine, perfume, cosmetics and jewellery. The Louis Vuitton brand was a particularly good performer, becoming the first ever luxury brand to take more than 20 billion euros in revenue in a single year. Here's the 10-year chart showing the share price performance, and you can see the shares are currently at a record high. Last year, the CEO and chair of LVMH overtook Elon Musk to become the richest man in the world. Moving on to have a look at next week, it's quite a big one for tech companies reporting. We've got results out from Meta, Alphabet, Amazon and Apple. That's it from us. Enjoy the weekend, and we'll see you next Friday.